Will Bitcoin experience a sharp drop after the pullback? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Right now, if you complete KYC verification and deposit $100, you will immediately receive a Bitcoin futures contract position worth $1,000. Here are the detailed instructions. Click the link below to register. Complete KYC verification and deposit $100. Then, you can choose to go long or short, and you will receive $1,000 in contract value. This means that if the market moves 10% in the direction you choose, your initial $100 deposit will double to $200. At this point, you can choose to withdraw your funds or wait. Even if you get a margin closeout, it doesn't matter. You can withdraw your initial deposit without any losses. Now, let's return to the Bitcoin market. Let's start by looking at the daily chart. Actually, we can notice this. Now, let's check out the MACD indicator. I have been anticipating this golden cross. It feels like it's just around the corner. It is coming soon. However, using the golden cross as an entry point for long positions is absolutely wrong, because the golden cross and death cross represent a weakening of the trend, not a trend reversal. For a trend reversal, we need to look at the moving averages. Let's look at the moving averages later. Here, let me first explain why using the golden cross for long positions and the death cross for short positions is a mistake. In fact, the golden cross represents a weakening of the downward trend strength. The death cross represents a weakening of the upward trend strength, not a reversal. It's not a sign to go long. Why so? Alright. So, what does the golden cross indicate? I mean, the potential golden cross. If it's formed, it means that the downward trend strength is starting to weaken. The downward trend strength has weakened. It does not mean that the downward movement has already ended. This statement is crucial. Alright. Let's take a look. In a previous instance, we experienced a continuous downward movement. If we went long during a golden cross, it would be disastrous. For example, at this point, we had a golden cross, which occurred around here. Looking at the daily time frame, as you can see, it was followed by a sharp drop. So, the golden cross indicates that the previous downward movement had weakened by the time the price reached this point. But it does not mean the end of the downward trend, as there is still a decline ahead. If we look further back, you'll notice the same pattern. Of course, what we discussed about golden crosses also applies to death crosses. Okay, let's look at a specific example. Like this one. Okay, you can see the golden cross, but there wasn't much upward movement afterward. Instead, it led to a sharp drop. And at this point, with a golden cross, if you had gone long during that time, you would have encountered a subsequent steep decline. Because the golden cross only indicates a weakening of trend strength, not the end of the trend. The current trend has been relatively smooth and consistent. Okay, now we see a golden cross, which means we can go long. What is the prerequisite for going long? At least a golden cross should occur. But it cannot be the sole entry condition. Furthermore, we must see the price stabilize above the support at $27,400. Stabilizing above $27,400. And this role reversal coincides with a particular position. If we turn on the EMA ribbon, we'll get a better idea of it. The EMA ribbon is a very sensitive indicator, because EMA is a weighted average of the recent period's prices. We can observe that when the moving average is below the EMA ribbon, the price is below the line, and the moving average immediately turns downward. This is because it is highly sensitive. As you can see, the price has been consistently below this line for several days. As long as this situation continues, the market will definitely transition into a bearish trend. Or in other words, a bearish formation, where the long-term moving average is above the short-term moving average. With a bearish formation, the market will be predominantly bearish. Therefore, if the market wants to transition into a bullish trend, or we want to have a market that is favorable for bulls, first, the candlesticks must stay above the white line. Second, they must get back above this moving average. You can see that these two conditions are almost overlapping. Essentially, as long as the candlesticks stay above the moving average, they are also staying above the S/a reversal, which is the white line. So, if we want to go long, buy spots, or take advantage of the bullish market, we must observe this price action. Otherwise, I would assume that the bears have the advantage. The reason? Now, it seems to be holding up. but I think it has actually broken below support. It's just struggling to go up. Why so? For that, we need to switch to a smaller time frame to explain in more detail. Okay. Let's switch to an even smaller time frame and mark this support and resistance line. You can see that at this position, we have support. Support at this position. And then resistance, resistance, resistance. Currently, the most important thing is the box pattern here. This box pattern. Well, the insider knows the ropes, while the outsider just comes along for the ride. Let's take a look. This box provides a lot of information that can be interpreted. Firstly, you can see that the price has tested the support above 3 times, and it couldn't break above it each time. The first time, it fell back. The second time, it attempted to go above, but then fell back again. And the third time, it fell back once more. The price failed to break through it 3 times in a row, indicating that the resistance at this level is valid. And when we have a trading range, or box, it becomes crucial to determine whether it will break upward or downward. To assess this, we need to examine the strength of both sides. Looking at the upper part, we can see that the upper boundary has been tested 3 times. As for the lower boundary, it's been tested once, twice, and 3 times, with the previous instance also counting as one test. Before the rebound, we have had 3 tests above and 4 below, where the latter is more than the former, indicating relatively weaker support at the lower level. It's weaker. Given the weaker support below, there is a higher likelihood of a downward breakout. Traders must exercise extreme caution in this situation. If it does have a downside breakout, it will be an opportune moment to enter a short position. In terms of the overall cycle, the ideal stop-loss level for such a bearish position would be at this point. However, if the price manages to return above this level, it would be advisable to exit the short position. Currently, the bearish sentiment appears to be dominant. Here's a bottom reversal, so this S/R reversal is not counted. We should look at the entire box. There's another criterion. If it's to go bullish, the trend line must be broken. Without a breakout above this trend line, there is no chance for a bullish trend. We should consider going long only when the trend line is broken. It's important to note that it's currently trading at low volume due to the holiday season, and its extremely low trading volume. Additionally, the recent rally may have enticed some traders to chase the market. However, looking at the CME chart, you may wonder about the presence of a price gap here. However, if we examine the chart from the past, we can see that the CME rarely leaves gaps unfilled, especially on larger time frames. You might say that on a smaller time frame, there is a gap on the upside. It's not visible on the daily chart. If the price remains around the level of the recent rally, approximately between $27,200 and $27,300, there is still a small distance to cover compared to the closing price. This segment is highly likely to be filled. So, you can see another false move during the holiday period. The price had a fake breakout, followed by a decline. Although the volume is low and doesn't provide much information, it's a false upward movement. On the weekends, some may interpret it as a convergence pattern. They take it as a converging pattern. How does it go? As you can see, it's making a lower higher and a higher low, indicating a gradual convergence. We need to wait for the final direction of this pattern and follow it accordingly. Currently, it appears that the bears have a slight advantage. Thank you very much, everyone. Oh, there's another great promotion. It's really fantastic. You don't have to do anything. Just share any of my videos and write a simple introduction in a short text to any cryptocurrency community or group with over 500 members. Then, take a screenshot and send it to this email address. You'll receive a free Bybit t-shirt, no strings attached. It's really rare. You don't have to do anything else. No registration. No deposit. Just sharing. You'll get the shirt for free by sharing it in a community. We also ship worldwide. Whether you're in Malaysia, mainland China, Singapore, or even the United States. We've previously sent them to Europe as well. So, we can guarantee that it will be delivered to your location. Not limited to Taiwan. Alright, thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye bye.